Welcome to another CEO Wisdom podcast with Andrew Kennelly with us today. Andrew is a managing partner at Bracket Financial. He's also the CEO of True ID Pro LLC and Patriotic Idea. We're going to talk about these business. He's sitting on multiple boards as well. We're going to have fun today, talk about anything from insurance, biz dev, SaaS, and everything in between. This pod is brought to you by podpair.com. That's my podcasting company. If you want to start, scale, or be invited to a podcast, we monetize podcasting the unconventional way. So you can Google my name, Charles Cormier, or go to podpair.com. Andrew, welcome to the pod. Tell me a bit more about yourself and about what you're up to nowadays.
Thanks for having me, Charles. I just a little bit about me. I grew up in Minnesota, been there my whole life. Unfortunately, it gets cold sometimes of the year. Right now, we are kind of dabbling in the AI world to try and make a better product for our identity theft protection services and our credit services that we offer to banks and credit unions. Other than that, like you said, I'm on a couple of different boards, most of them being fintechs or credit and consumer and financial related. So stay pretty busy with that, and was asked to join a board a few months ago for a company called Bracket Financial, and they've asked me with my background to kind of come in and be kind of more of a managing partner of that as well. So stretching myself a little thin, but keeping ahead of the game.
So why did you choose financial services slash financial planning and life insurance as a field of expertise and something that you would like to spend your time and your life on?
Well, that got me interested in it when I was about 14 years old. I took a class in high school, and we had to learn how to read the stock market. This was back when we had to pull out a newspaper and find a stock quote. And we were given a fictional amount of money to play with in that first year. And we started the first year of school, or the first month of school. And at the end of the year, we kind of looked back at who made the best stock picks and did the best things. And I won this thing. And it wasn't like a surprise or anything. It was just, kind of the, congratulations. And I kind of looked at it as like, well, this is pretty easy. This is kind of what I took from it. And I was working a part-time job, and I asked my parents to open up a brokerage account for me. And I started playing with my actual money. And, I realized that I could lose a lot of money. I could make a lot of money. And so kind of made some mistakes along the way, but realized that it was just kind of something I was passionate about. And so finance and credit and money has just kind of been what I've been drawn to my entire life.
Right. What kind of impact can having healthy finances and planning your life and your wealth, what kind of impact can it have on someone's life? And on both ends, how devastating can it be if you don't plan, and how cool can it be when you have your finances in order?
Well, I think everybody knows that they need to have their finances in order. Unfortunately, the behaviors that people choose to make are going to impact them more than anything else. In the financial planning side of things, you can have two people that grow up in the same methodology in the same household that have vastly different opinions on how they should spend their money. Some are going to want to save it, some are going to want to spend it. And if you don't plan properly, you're not going to have any money to spend when you're no longer able to make money. I've always been a big believer in making sure you live your life to the fullest as much as you possibly can, but always make sure you have something to fall back on, because you never know when you're not going to be able to earn an income or need to support your family in a way that you're not prepared for right now. So that's kind of the biggest thing. The biggest impact, I think, is people truly don't understand how money can work for them. And that's the biggest thing I try and tell people is, look, you can have a really nice lifestyle, and having your money work for you is the best thing to do. And I've got a 16-year-old daughter right now. She's been investing since she was 12. She's got retirement accounts set up. She's got life insurance set up. So I'm trying to instill that in her going forward, so she knows the importance of it as well. So my wife, on the other hand, is a big spender. So we're trying to work together on that. So.
Right. What about the SaaS aspect? You've been SaaSifying a bunch of the businesses you've been involved in. So why and what kind of impact are you seeking from bringing software to these companies? And precisely, how do you bring software to these companies to make sure that there's more sales and customers are more pleased with the features you're adding?
I think it's just kind of been an evolution of business overall. I think software as a service is a model that's not going to go anywhere. I mean, having a monthly recurring revenue stream is very, I don't want to say opportunistic, but it's a great opportunity for business to get into, because people will pay a monthly fee that they can afford. But if you try and drop an annual fee, they tend to kind of get a little bit more skittish and not as eager to sign up for something. So everything we do is kind of on a monthly recurring revenue model. Now, in the beginning, if you don't have that, you're going to take a big hit because you're going to see your revenue drop drastically. But over the next recurring 12 months to 18 months, you're going to see that money come back. And it's a stickier situation for the consumer. A lot of the things we do, we actually work directly with financial institutions, banks, and credit unions and brokerage houses. And so they're paying for it for the consumer. And they're just paying on a monthly thing for paying a monthly fee to us to license that software. On our direct to consumer side, we do have people that pay annually, but the majority of people want to pay that smaller monthly fee every month and get the same services. It tends to work out well for the consumer and for the business long term.
What would be your top goals for next year?
We want to see revenue growth. I think everybody right now is kind of going for the same thing. We are working really diligently behind the scenes to make a better product every single day. So our biggest thing is we have a couple of new platforms we'd like to roll out as far as the software side of things goes, to launch with our bank and credit union customers, that hopefully with the model we're working with is going to bring our price point down, and then we can pass that along to our consumers and to our strategic partners and make it actually a better option for them. And really, by lowering that price point, we believe that we can actually generate more market share because we'll be able to come in and be more competitive.
Right. And what challenges have you faced this year, especially since the dawn of COVID this year, the wars, uncertainties, economic decline, I would say, economic activity decline. What challenges have you faced this year, and what challenges do you expect to face next year?
The challenges we faced coming into COVID were pretty substantial. A lot of our sales is in person. We're going and talking to banks and C-level executives. And when COVID hit, no one was doing meetings. No one was really comfortable with Zoom. And when we're talking about the type of software we're trying to integrate into a banking system, they don't want to do it over a Zoom call, unfortunately. They want to see it in person, how it works. So that shut our business down almost essentially from a sales standpoint for a good 18 months. And it started to come back. And now the biggest challenge for us now is with the economic conditions they are and the interest rates rising, and banks are holding on to their money. So for us to go in and say, here's a new program for you, they need to see how the revenue is going to be created immediately. And our program is not designed for that. It's definitely a long-term play that we can show them how it's going to drive revenue and engaging their customers over a long period of time. One of the things that we're finding is customers want to know about their financial situation, but they don't want to be bombarded by the bank telling them, hey, buy this product, buy that product, buy this product, and so on. So the new product we're rolling out is going to be a much more subtle way for us to do that for those banks and credit unions to really develop that and engage that customer experience.
We've seen Silicon Valley Bank fall this year. Like, what have you learned from them?
I think that's, easy money is no longer going to be easy to get, right? It's no longer going to be cheap. And I think you're going to have a time right now coming up in the next year or two where you're going to have a lot more regulation and a lot more scrutiny over any big deals. And you're going to see that, Silicon Valley Bank failed because they were over leveraged. And we work a lot with the smaller banks, so we don't have that situation falling into our laps. I mean, obviously banks are tightening up their lending restrictions and also trying to keep their cash reserves a little bit more because they don't want to be the next bank that fails. I mean, it's just bad business and bad press for the whole industry.
So can bank run happen again in the industry, and what mechanism could we utilize to prevent these from happening again?
That's a great question. I wish I had a solid, concrete answer for you. I mean, obviously, you'd like to think there's a little bit of, a check and balance in place, but as we've seen with Silicon Valley Bank and some others, they can happen. I don't think you're going to see a huge bank run, but you are seeing money leaving banks and moving into more of the mutual funds and the stock brokerages. But I don't think we're going to have a huge bank run like we've seen in the past. But that's just, again, that's my personal opinion. And the banks I'm working with, they're pretty well liquidated or liquid.
Insurance, what would be the future of insurance, especially when it comes to insurtech? What do the consumers want? And how is the landscape changing? What are your predictions in the next decade?
Well, in the next decade, it's hard to tell because insurance companies are always coming up with new products to do. In the short term, you're going to see a lot of things on the property side of things, your homeowners insurance, your car insurance. They're going to go up and they're going to keep going up for the next year or two, just because you have so many insurance companies that are losing money on, fires and storms down on the coasts and droughts. You're having issues with tornadoes and hurricanes. So in the short term, you're going to see these rates keep going up until these insurance companies can figure out that risk assessment and get their actuaries to figure out exactly what their loss ratios are going to be. I think once that happens, you're going to see the insurance market kind of soften a little bit, and people are going to be able to come back into that as far as the players can come back in as from a property casualty standpoint. As far as life insurance, I think with the most recent bank issues and the regulations that have come out and interest rates rising, you're seeing money flowing into life insurance policies that people are using as a hybrid savings investment type vehicle inside of an insurance policy, to give them those guarantees and those promises that they can't get from a bank or a CD.
What about measuring output, inputs from your customer better? If it's car insurance, would be data from the car, partnerships with the car company. If it's health insurance, for example, it could be Apple Watch and Oura Ring that could fuel this data, and the insurance policy could be modified altogether. What do you see as innovations in that sector?
Well, you are seeing it on like the car insurance side. You have the devices you can plug into your car and it measures your driving habits, and that can actually create more of a customized rate. And I do know there's 2 insurance companies out there right now that are trying to partner up with smartwatch manufacturers to see how much someone's walking, what kind of exercising they're doing, and creating more of a personalized health insurance quote for somebody if they're on a private market. And you're also seeing more insurance companies that are willing to cover things like gym memberships, because they're starting to see that preventive care is cheaper than having to pay the medical expenses later down the road. It kind of makes sense from an insurance standpoint to do that. And it makes sense from a consumer standpoint to have an insurance company that rewards you for taking care of yourself. So the innovation is going to be there. It's just what you have to figure out the best methodology to collect that data and provide that to the insurance company, and how many people are willing to do that. Consumers, I think, are going to be a little bit hesitant to share all of their medical data with an insurance company. But I think there's going to be a balance that's going to occur in the next 7 to 10 years.
What business trend is catching your attention nowadays?
AI. I think that's the big thing that everybody's kind of looking at right now. With our business right now, we can use AI to we can actually see customer data in the banking platforms that they're using with their banks to offer them better than. Can you hear me okay?
Yeah, your video just went off.
Okay. So using those AI generative tools, we can find, opportunities for our partners to engage the customer better. So AI is going to be a big thing for everybody. I think, if you're not trying to use it, you're probably going to fall behind. And, we started our company doing the software already behind because we were a smaller company. So we're innovating every day. We're trying to make a better product for the consumer and for our partners all the time. And so AI is going to be a big part of that.
And in the SVB case, an AI to make some PR predictions of if you say this, then that could potentially happen, run simulations, and calculate how much you have in the bank to prevent potential bank runs, I guess could be important here. We could also speculate in the case of FTX, they really, I mean, Sam was somewhat calculating risks, but if there would have been an AI to calculate that if this then that and the probabilities, which is complex calculations because the market is constantly evolving, maybe that could help to not have institutions fall over that quickly.
I agree. I think AI is going to play a big part of that. But, when you look at something like FTX and Alameda, it wasn't, I don't know all the details of it, obviously, but you can't have that much money go missing without somebody knowing. And I think the courts have decided that that's true too. So AI is going to be a great tool, but it's not going to be the answer for everything. You're still going to have that oversight and regulation. It's just one more thing you can use to help, understand where that money is going and the flows of things to prevent those things. But you still have to have the human oversight, because the simulations are going to take all the emotion out of it and all of the common sense, I guess, is a good way to put it.
Where do you see fintech and neobanks going? What directions are they taking, and how can they compete with big banks?
I actually don't think they're going to compete. I think neobanks and fintechs are going to actually partner with bigger banks. You've already started to see that when you have, Zelle is a creation of some of the bigger banks, and you're going to see the bigger banks realizing they're losing pocket share to these fintechs and these startups and these neobanks, and they're going to start to partner with them to offer these opportunities to their customers or the unbanked. So I don't necessarily think it's going to be a thing where it's going to be one or the other. I think you're going to see a merging of the two. They're going to come together because the banks are going to realize they need these tools, and the fintechs are going to realize that the big banks have the money to pay for them. So you're going to have an emergence of partnerships that are going to come about.
Right. Yet we've also seen big banks fall very quickly. And I think that AI is going to replace a good part of their workforce, although they do have humongous quantity of capital. So with that being said, not direct replacement, but with time, I do think that smaller AI first and more agile agents companies will take over. What do you think about that?
I think you're already starting to see it. I mean, you have the chat bots on websites for bigger banks. You can have, you have automatic teller machines now that you push a button and you can actually video conference to somebody from anywhere. So you can replace tellers that way. You're going to see just the nature of business is always going to be, how can we wring out as much money as possible and spend as little as possible? It hasn't gone away. Now this is just one more tool that they're going to use to figure out how they can reduce the workforce and reduce their overhead. And unfortunately, I think COVID, played a big part of that. I think companies realized that they didn't need to have these employees all in one location. They could work from home. They could have technology take the place of a lot of these employees. So AI is definitely going to amplify the rate at which these jobs that can be replaced and can be done by AI are going to happen.
Where can people find out more about you, Andrew?
They can go to our website, trueidpro.com, or they can actually reach out to me directly at andrew@trueidpro.com.